Welcome back to EG Financials. Today we're taking a look at our monthly update for the real estate market forecasts. We take a look at Fannie Mae, Mortgage Bankers Association, Zillow, CoreLogic, and Freddie Mac. And all of these forecasts for the following few years have been updated as of December 2023. And before we start looking at their forecast for home prices, make sure you subscribe and like the video. Alright, and let's start off with Fannie Mae. For 2023, home prices are expecting them to increase 6.7% by the end of the year. 2024, they're expecting a 2.8% increase in home prices. And for 2025, they're expecting a decrease of 0.4%. Mortgage Bankers Association is expecting 2023 to end the year 5.7% higher. In 2024, they're expecting home prices to increase 4.1%, then 3.3%. And then in 2026, they're expecting home prices to increase 3.9%. Zillow is now expecting home prices in 2024 to stay flat with the 0% increase. CoreLogic is expecting home prices in 2024 to increase by 2.9%. And then for Freddie Mac, I don't have their updates yet. They typically release their new updated forecast around the 20th or 21st. So once I get those numbers, I'll update this chart. So here we're looking at their forecast from the previous month, so their expectations that they released back in November. And then here at the bottom of the table, we get down to the averages. So for 2023, we're averaging about 5.9% increase in home prices. And then in 2024, we're averaging 2.5%, and then 1.5% in 2025. And for 2026, when we have Mortgage Bankers Association, so we're at 3.9%. And again, I do like to compare the current month with the previous month just to see if we're in some kind of trend, whether it's going up or down overall. And we do see a slight increase for 2024. Last month for November, these institutions were forecasting on average about a 2.4% increase in home prices. Now we're at 2.5%. And if we look at it by row, we can see that it's CoreLogic with an increase. Last month they were forecasting a 2.6% increase in home prices. Now they're at 2.9%. And last month in November, Zillow released their 2024 forecast, showing an expectation of a decrease in home prices by 0.1%. And now there's a slight revision where they're just saying it's going to be flat for 2024. Okay, and here at the bottom we have tables for the 30-year mortgage rate. Fannie Mae is expecting 2023 to end the year at 6.8%. And then in 2024, mortgage rates will be at 6.7%. And then in 2025, a further decrease down to 6.2% for the 30-year fixed rate. Okay, and then Mortgage Bankers Association, they're expecting the 30-year fixed mortgage rate to be 7.4% by the end of this year, and then down to 6.1%, 5.5%, and then in 2026, they're expecting mortgage rates to be down to 5.4%. And here again, we can compare the new updated forecast numbers for December versus November, and we can see that overall, they're updating or revising their forecasts lower for the mortgage rates. So for 2023, Fannie Mae was expecting a 6.9, now they're at 6.8, 7.3, now 6.7, 6.9, and now 6.2. And same thing with Mortgage Bankers Association. Last month they were saying rates were going to end the year at 7.5, now 7.4. 2024 they kept the same, and 2025 they kept the same, and now they included 2026 forecast. Okay, let's continue on to this report released by Fannie Mae along with their forecast for the real estate prices. I recommend you go to their website and you read the full report. It has a lot of great insights and details, but I made some key highlights so we can go through that and just take a quick look at it. While inflation decelerated largely as expected, economic growth has proven to be more resilient than we anticipated. We are now expecting 2023 real GDP growth to be 2.6% on a Q4 over Q4 basis. While the combination of disinflation alongside continued low unemployment points to a soft landing within reach, the dynamics that led us to expect a correction mostly persist. In housing, our persistent view that affordability challenges, lock-in effects, and a lack of available inventory of homes for sale would keep existing home sales at the slowest pace since the Great Financial Crisis proved correct. New home sales, however, were more resilient in the face of high mortgage rates than we had expected. The recent pullback in mortgage rates to 6.95% from their peak of 7.79% in October points to an incoming rebound in sales. But even with recent declines, mortgage rates are currently similar to those of the summer of this year. A 2023 recession appeared to be developing. However, as the year progressed, consumer spending remained resilient and acute banking stress subsided while home prices rebounded. Continued economic resilience has surprised many forecasters this year. However, we're not ready to declare that the window for a recession has passed. The labor market has cooled from extremely tight conditions in 2022 to a healthy level that broadly mimics its state in 2019. Current monetary policy stance is still restrictive and past tightening is still working its way through the economy. Bank lending is slow, near-term indicators suggest business investment is currently sluggish, and consumer spending is still in excess of its historical relationship to incomes. Given the current restrictive stance, to achieve a soft landing, monetary policy will need to ease sufficiently this next year to prevent a downturn, but not to reanimate inflation, a difficult balance to achieve. Home buyers now appear more acclimated to higher mortgage rates than they were in 2022, as evidenced by a lower degree of order cancellations in the most recent episode of rate increases. And that's it for today. Make sure you subscribe for more updates. I track all of these forecasts from the institutions, and then every month I update the video and the spreadsheet so we can stay updated with the real estate market.